Hello and welcome to PolicyBazaar. I'm Arjun Bhagat. Now, life insurance not only provides for financial support to your loved ones in your absence, but is also an instrument of long-term investment. It helps you meet your goals at various life stages, be it education of your child and their marriage, planning for retirement, and so on. However, a single policy may not suffice to provide financial protection for your dependents or help meet various milestones at various life stages if you are not adequately covered. Here is where having riders would help. Today we'll be discussing about various life insurance riders with Yashish Dhaya, CEO and co-founder of PolicyBazaar. Welcome to the show, Yashish. Tell us about life insurance riders. We know a little bit about health insurance riders. They are marketed quite aggressively. What about life insurance riders?
Life insurance riders and health insurance riders, if you kind of think about them, a health insurance rider is health insurance is a 1-year policy. So a rider that comes with it is a 1-year rider. So next year you can purchase that rider again. Whereas a life insurance rider, when you purchase it, comes for the entire duration of the life insurance product. So if you're buying a 20-year product, then for that entire 20 years, suppose you take a critical illness rider or a disability rider, then for that entire 20 years, that rider exists. You cannot switch it on in the middle or switch it off in the middle. It comes with the product and it stays with the product for the lifetime of the product. So that is what a life insurance
So there's an overlap in the health insurance riders as well as life insurance.
You can have the same riders from both. So not all the riders can be the same for, and I'll give you some examples. Like for example, Waiver of Premium. Waiver of Premium is a rider where, essentially at some stage during the policy, if an unfortunate event happens, no more premiums need to be paid, but the policy continues, right? Now that kind of a rider does not make any sense in a health insurance policy. Because a health insurance policy by definition is a 1-year policy. Next year, if you don't pay the premium, the policy is not there. And there is nothing like, the policy is finished the day that 1 year is over. Whereas the life insurance policy is a continuous policy. It's a 20-year policy, 30-year policy. So obviously a waiver of premium can make sense there. However, other riders like your critical illness or disability are very similar. So critical illness is covered in both health insurance.
And I guess the advantage of life insurance riders would be that the cost of the rider is not going to incrementally go up.
So that is the beauty of all the life insurance products. Once you decide on a premium, that premium stays fixed for the next 20 years or 30 years. Whatever be the cost that you're going to get. While in health insurance, the premium changes every year. But underlying, what is the reason for this at the underlying level? Of course, as you get older, your risk increases. So if you're purchasing a life insurance product, the chance of a 27-year-old person, dying because of an unfortunate event is somewhat lower than the chance of a 45-year-old, which is also lower than a chance of a 75-year-old person. So ideally, your cost of life insurance is going up every year. Your mortality rate is going up every year. However, when you purchase a 30-year plan, you are paying equal premium every year. So you're actually paying for the entire 30 years or the entire 20 years. So the life insurance is a fixed price product, whereas health insurance will go up every year. And that is one of the reasons why in life insurance does not make sense to purchase a plan and break it. Because if you break a plan after 5 years or 6 years, chances are you overpaid because you are paying for life insurance when you were younger, while the cost is obviously lower right now and it's going to become higher in the older age. So clearly it makes sense to buy longer term plans, etc. from that perspective.
So go through the various riders which are available because the options seem to be increasing. The permutation combinations of a rider and how it's structured are also changing. So what do you think would be a couple of good riders with your main insurance policy?
I think it's important, in the plethora of riders that is available there to identify which are the ones that can be suitable for the consumer and which are the important ones. Otherwise, the list would be too long. So if we look at that, the most important riders that come along with the life insurance policy would be accidental death or disability. These are two separate riders and they can also come as one. So you can buy accidental death and disability as one rider or you can have them as separate riders. Accidental death is in case the death happens because of an accident. Pretty much the payment that the individual's family gets would be doubled. That's broadly what the idea of that rider is. Whereas a disability rider is that in case there's a disability, in case it's not death but disability, Somebody loses a limb, somebody loses one eye or both eyes, etc. These events do happen. In that case, the individual gets paid. So these are two of those riders. The third most important one is critical illness, which we've discussed many times. There's 35 odd critical illnesses. Every company covers a different one. The primary 5 are covered by everybody. So, in case one of those diseases happen, the amount of that critical illness is paid out. So whether it's 10 lakhs, 20 lakhs. The beauty of buying into the life insurance product again is when you purchase it for the entire 30 years. So you get the critical illness for the entire 30 years. So it's a very good way to purchase this. The fourth one is the waiver of premium. In case an unfortunate event happens, you don't want to be in a situation where you cannot continue the policy because the premiums could not be paid. So the waiver of premium essentially at a very fractional cost ensures that no more premiums need to be paid. So these are what I would say are the primary riders that one should look at.
So if you have an existing life insurance policy, can you still go back to the company and say, look, I didn't opt for the riders, can you add those on? Is that an option which is available now?
It can be, but it is not a guaranteed option. So that is at the discretion of the insurance company. Usually it's very difficult, but if you do want to get a rider added mid-term, it is quite a complicated process because your premium needs to be recalculated. More importantly, if you imagine, think of this. The policy when you purchased it was 10,000 rupees per year, and it included, let's say, critical illness. Now 4 years have passed. Now you wish to purchase the policy, you want to add critical illness to it. So the person needs to determine what was the cost of critical illness for the first 4 years, what is the cost for the next 16 years. It becomes a complicated activity. If you say, I will purchase the policy all over again, then you'll basically be paying for the next, which is going to be more expensive because all the life insurance, etc. cover also come in. So it's not going to be a new policy. It has to only be the rider. Chances are the company will not do it. But in some case, the company might do it. It's totally to the discretion.
So you had also mentioned that you can take some of these riders as standalone, like personal accident is something that you advocate strongly.
Yes.
So how does that work then?
So when you purchase it individually, it's an individual plan. So you bought a personal accident plan. In case an accident happens, then the amount will be paid, and that's only going to cover accidents, and it can be accident and disability.
So one can actually look at insurance policies and say that these are the riders. I'm not getting it. I can go and get it as a standalone policy.
Absolutely. In fact, if you ask me, my honest opinion is, besides one or two riders, it is not feasible to I think. For example, this disability or personal accident rider is something that everybody should take with their life insurance. That is just a must because it just goes with
both of them.
Both of them.
What you recommend.
Both of them. I think that they just go with the life insurance. I think critical illness goes more with health insurance. Critical illness, one should definitely take a standalone plan if they can, whether it's through a life insurance company or through a health insurance company, because it's an important.
So how much would the top up be in terms of the cost? I mean, just a ballpark figure. See, it varies according to companies.
The maximum cost you can have, and that is one of the reasons I was saying it may not be right to try and buy everything through a rider. The maximum cost you can have of the base policy is 30%. So if you've bought a policy for 10,000 rupees, you can add on 3,000 rupees of riders, which is not going to be sufficient to cover everything. See, you can't really buy a standalone waiver of premium policy. So waiver of premium you can only buy through rider. So I would suggest, people should, I would encourage people to think about waiver of premium rider, and I would encourage people to think about disability rider. Typically, a critical illness, personal accident rider will typically cost about 20-25% of the base plan. So that has taken about 20-25%. After that, you've only got a little bit left. So that you can add maybe waiver of premium. Taking a critical illness plan as a rider is going to be somewhat difficult because it will be a little more expensive than.
And that can be combined with again a health insurance.
You could either buy it in a combined manner or just take a standalone policy. I think a standalone policy is perfectly fine. And there's a reason for that. See, if you buy it as a attachment to a health insurance plan, tomorrow you want to port your health insurance plan. The person you're porting to may say, I'm happy to port the health insurance, but I can't port the critical illness. You're stuck. And that is very common. We come across that very, very often. Because I don't have a similar plan on critical illness. So they don't port it. And you're stuck. And by that time, some pre-existing diseases have come in, etc., etc. So why get into that situation? Keep your policies separate. Critical illness and health insurance separate. I think it makes total sense.
What about lesser known riders? I mean, I came across a term and it's called guaranteed insurability rider. What does that mean?
So these riders are becoming increasingly popular. They're coming in various formats. See, to cope with inflation, both in health insurance and in life insurance, what companies are guaranteeing is that you take a 1 crore cover today. When you have a child, when the family has a child, we are happy to increase this cover by 25% without any further medical or check. Now, the beauty of this is, in this interim, some pre-existing disease could have come. And if you go for medical, you may not get that policy. So it's a very good option to have, to be able to increase your cover. And that exists in both health insurance as well as life insurance. And I think this cover enhancement is largely to take care of inflation and life stage as one gets. So if you look at life insurance requirement, from when a person is roughly about 25 to when a person is roughly about 65, life insurance requirement goes up and then comes down. It peaks at a stage when your outgoes are the highest. So your children are still being educated, they are getting to college, big education expenses coming up. Lots of people are dependent on your income at that stage. So that's the point when it peaks. And after it starts coming down, because as the children have their own life, they kind of start having their own careers, your requirements go down, and your working life is reducing. Because most people are working till about 65. So as you get to 55, 60, you've only got 5 years more to work. So your life insurance requirement starts coming down. So I think to cater to that kind of life stage based life insurance, these options are given. I think they are amazing because they are guaranteed in nature and they do not require any further tests. If you had to buy a new policy at that stage, you would have to go for tests, you would have to go for medicals. Those are not required. But there are a few others. So there are riders like, you can add your spouse to the same plan. So you have a base plan. Let's say I have a 1 crore base plan. I can add my spouse to have a 25 lakh life cover with my base plan. So it becomes kind of a joint plan, and that can come in as a rider. You could have a few other similar kind of products that can come in as riders. So there are lots of options out there from a rider's perspective. We spoke about waiver of premium. They can come in various stages.
So in terms of life insurance riders, what about education for your kids? Because that seems to be a major issue with a lot of people. And so what are some of the good critical riders to consider to fortify, that your family is provided for if something does happen?
I think the most important rider in child plans, which is where children's education comes in, is waiver of premium. Because see, let us say you're paying 1 lakh rupees premium every year to accumulate 30 or 40 lakh rupees for your children when, for one child going to college. That is about what's going to be required by the time children grow up. It already is in some colleges. So this 1 lakh rupees per year, suppose unfortunate event happens in year 3. Now, there may be 15 years more to go, and that 1 lakh rupees is not available. Now, that should not be the reason that one loses out on the possibility of getting that 40 lakhs. More importantly, that should not be the reason why, the policy has to be cancelled, and in most of these policies, you get very suboptimal returns if you cancel policies in the middle, etc. So, that is where if you have a waiver of premium, it makes sense. You can also have something like a family income benefit rider in that situation. What that does is, while that 40 lakhs is protected for the end, but instead of you paying 1 lakh into the policy starts paying back 1 lakh rupees to the family every year. So it starts giving an income. That's called a family income benefit. Again, in the case of an unfortunate event, where not only is the premium waived, but also these riders don't cost a huge amount. Because as you can imagine, compared to the 40 lakhs, this is not a large amount, the waiver of premium part. So such riders I would definitely encourage, and they fortify. See, the child policy is a beautiful construct. The reason that policy is such a beautiful construct is because it guarantees the child that money. There is no other product in the financial services industry today that, in my view, guarantees the child that money the way a child insurance plan does. Because that money, whatever happens, whether it's happy times, bad times, sad times, that money is going to be there. And I think the waiver of premium and family income benefit help in that.
On that good advice, we have to take a short break. But you can write to us at queries@policybazaar.com, and we'll see you shortly after this break. Keep watching Policy Bazaar. Welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Yashish Dhaya, who's going to be answering your questions. We've got Mukesh, who's written to us, and he asks, what happens to accrued bonus when we switch from family floater to individual health plans, and what happens to the past medical history under such a scenario? Yashish.
So whenever you go from family floater to individual health plan, whatever your benefits you have accrued in terms of your essentially the number of years of pre-existing that you have covered will get transferred to the individual plan. Now, every plan has got different benefits for continuity or no claims, etc. So you will unfortunately not be able to accrue those particular benefits from one plan to the other. The only benefits that you'll be able to accrue are the fact that you've had the policy for 3 years. And so the pre-existing diseases, if suppose you had a plan for 3 years and the pre-existing disease was for 4 years in the new plan, you will basically be left with 1 year of pre-existing disease exclusions. So you won't have to go through the entire 4 years. That is the benefit you would get. But all the other continuity benefits that exist with the new plan will be provided to you, but they do not include no claims benefits, etc. on the previous plan. That will not transfer to the new plan.
All right, we've got Eric Pereira, who's 59 years old, and he had undergone an angioplasty 6 months back and spinal surgery 3 years ago. He's also being treated for epilepsy since the last 30 years. However, he's not had any convulsions, he says, since the last 30 years. He wants your advice, Yashish, on what kind of health insurance he should consider. As of now, he's covered under a corporate health cover.
Yeah, so I think he's coming very close to retirement. From whatever I can see, 59, maybe another 5-6 years. It's a tough one. I would say there are 2-3 companies that may, with some exclusions, consider some health insurance plans. But in case he does not manage to get any of them, then what I would advise is go for one of the senior citizen plans or go for a heart care plan. The Star Health has a heart care plan wherein people who've had heart disease can also get a cover covering some of those diseases. So I think he would have to look out. I think Max Bupa, Religare, Apollo, Star could have some options for him, but they would be specialized, specific plans like a heart care plan or and they would have exclusions as well. But I would say in this particular case, he should go out and look for these options. And he should start as early as possible. There is a possibility that he may not get a cover also, and he has to be prepared for that. So he should not think that something has gone wrong if the companies just refuse. That is just the situation that can also happen.
Right, Yashish. And next we've got Raghav, who's written to us. He says he has a Bajaj Allianz family floater plan and wants to know if his plan would cover his daughter once she gets married, as well as his 25-year-old son. So I guess he really needs to understand how this entire health cover works.
Yeah, so the son after 25 will not be covered. There are 2 ages at which boys do not get covered. One is 21 and one is 25. And different plans have these 2 different ages. So definitely after 25 would not be covered. And also the daughter would not be covered in the family floater post-marriage. Technically, there is no particular reason, but that's the way the plan has been structured. Also, given the age that I'm assuming so you're reaching, which if your son is 25, you're probably about 50, I would suggest going in for individual plans and not sticking with a family floater plan, because that is about the age when you should shift on to individual plans, and your children should go for their own individual plans with their respective families, or even if they do not have a family yet, they should still go for their individual plans. That's the advice at this stage.
Right, we've got Mr. Shanbhag, and he's 68 years old. He underwent a heart surgery last year. He is interested in buying a health insurance cover with a SI of 3 lakh rupees. He watched our previous episode around health insurance and is aware that this plan will come with certain waiting periods and sublimits, and he wants to know if there are any health insurers that would not impose a longer wait period, and would 3 lakhs suffice, he asks.
So I think Star Health has some options for him. I also think Star Health Senior Citizen Plan, as well as Bajaj Senior Citizen Plan and New India Senior Citizen Plan. So some Senior Citizen Plans can, he could purchase. The Senior Citizen Plans would have an element of copay. Hearing out the situation, 68-year-old with the heart disease, I would say the chances of getting an unlimited sort of or unrestricted health insurance plan are almost negligible. That's the unfortunate truth. I think most people have to purchase these plans before they get these diseases and before about 45 years of age, 35 years of age actually. So the harsh reality is you would most likely have to go for a senior citizen plan, which would have an element of copay. That's not so bad. The copay is usually restricted to about 50%. Between 20 to 50%.
So explain copay for us.
Copay basically means when you go to hospital, if you have a 2 lakh rupee expense, so say example you're taking a 3 lakh rupee cover or you're taking a 10 lakh rupee cover, you have a 50,000 rupee expense in the hospital. So you pay 25,000. If you have 50% copay, you pay 25,000, the insurance company will pay 25,000. Basically the insurance company is saying, you're going to have a lot of claims and we will pay 50%, but you got to pay 50%. And that's not so bad. That's not such a bad situation. It could be that the insurance company says, I will not cover you at all. So I think it's better than not covering at all. And most of these plans do not require a medical. Most of these plans are fairly considerate and that they're designed for senior citizens who are likely to have a lot of claims coming in every year. The unfortunate reality is still a lot of people have not purchased health insurance plans in their 30s, 35s, 40s, 45s, 50s, and when they are hitting 60 and they've already got a disease, then they come back and say, oh, I wish I could get a health insurance plan. And at that stage, no company wants to take them on. And you can't blame the companies. The companies have to make, they're not there. The companies are very fair. They want to take risk. If you are coming as an individual and you may fall ill, you may not fall ill, they are wanting to take on that risk. But if the chances of you falling in have gone to almost certainty, that's not the stage at which that's not for insurance, that's financial. So basically what you have said, let me make the harsh statement. Basically what you have said when you're 35 and not taking a health insurance plan is that I will self-insure for life. If something goes wrong, I will handle it.
But that's putting it bluntly. But
bluntly, basically,
right.
then now that you've said that, now you've got to handle it.
Right.
Now that's the unfortunate situation. But the copay route is an understanding route that okay, there is still some mechanism. There's still some mechanism.
It's a bit of a compromise.
It's a bit of a compromise, but it's there.
But it's there now, which wasn't the case a few years
back. No,
it
wasn't the case a few years back.
One didn't have those choices when you got older than 65. But that's all the time that we have, Yashish. Thanks for joining us. Last week's question was, what is mandatory in motor insurance? And the correct answer is third-party insurance. The winner is Ashish Gupta. Congratulations there. This week's question is, you surrender your policy if you A, make partial withdrawal, B, cancel your life insurance, C, decrease your life cover. And you can send in your answers to queries@policybazaar.com, and we'll see you next time with another episode. Goodbye.